This New Orleans Investment Conference is something you've been coming to year after year, over 30 years. Why do you keep coming back?
The New Orleans Conference has a deep history, first of all. The conference is actually 40 years old. I've only been coming for 30 years. But it's been a mainstay in the precious metals investment business for that whole period of time. And it's been an important mining conference too. It's also, oddly, a conference that I've been very lucky at. I've had some stock picks from the podium of this conference that have been anomalously lucky over time. The tendency of some of the conference attendees to come year after year after year, the conference has become increasingly productive for me, even as my duration has gone on. So it's a very useful franchise for me.
That's great. Now, what are you taking away from this year's conference that you can share with our audience?
I don't know that I've learned much yet this year. I think it's instructive in a general sense that people are paying attention to exploration again. The last bull market that we had in precious metals was really sort of an optionality market. It was a metals price market and a market where you pay attention to value creation separate and apart from commodity price escalation is a much healthier market. The last real discovery market we had among the juniors was in the early 1990s, 1992 to 1996. And it was an extremely violent up market. And I'm not saying it's going to happen, but if we had a combination of a sort of a soft resource bull market and an exploration market laid over top of each other, we could have a market that surprised everybody to the upside, sort of 2019, 2020. And I'm getting increasingly inclined to think that's going to occur.
Now, what's your current gold outlook at this time?
I'm a gold bug.
Yes, you are.
Let's get
Definitely.
that part clear. So I'm not one of these guys who thinks that gold's going to be $3,000 in 12 months or anything like that. I think that gold is going to continue to move the way it's moved for the last year. Gold's job is to preserve your purchasing power. And people who buy it as a speculative asset are probably making a mistake. They should buy gold stocks to speculate, and they should buy gold like they buy insurance. I also believe that much of the narrative around gold is wrong. The talk about gold being driven by North Korea, I think, is silly.
Funny you mention that because we just had a conversation with Trey Rake of Sprott about that very thing. So can we get your analysis?
Yes, my experience has been that the most important determinant of the US dollar gold price is confidence in the US 10-year Treasury, the world's benchmark security. That security's been in a 35-year bull market. The interest rate on the Treasury has fallen from 15.6 to 2.1. Now, I'm not saying that the Treasury price can't go higher. What I am saying is that after a 35-year bull market, it is probably closer to the end of the market than the beginning. And if you buy the fact that gold trades conversely to the US Treasury, then the gold bull market is probably closer to the beginning than to the end. Separate and apart from those trends, I think what's important in the discussion of gold and the US Treasury is the federal balance sheet, and it's not pretty. $20 trillion in on-balance sheet liabilities. That's a 20 with 12 zeros. Oh. It's an almost incomprehensible amount of money. And behind that, there's over $100 trillion in off-balance sheet liabilities. Younger people like you sometimes don't know what off-balance sheet liabilities are. They're me. They're 64-year-olds who will be getting Medicare, Medicaid, Social Security, all these sort of entitlement promises that have been made that are unfunded. And the conjunction of really over $100 trillion in liabilities, I think, is ultimately damaging to the purchasing power of the US dollar and hence good for gold.
Right.
Will it happen next year? I don't know. Will it happen the year after? I don't know. I don't even care. For me, owning gold is an insurance policy
that's necessary at this point.
Against the idiocy of entitlements and politicians.
Right. Well, you know what? Trump is a topical conversation. Every single panel or discussion I've been to here has been surrounding that. What's your general overview of the president at this time? What grade would you give him as president of the United States?
Oh, I don't think that there has been a president in my lifetime that I wouldn't have given an F to. I don't like any of them. I believe Mencken described elections as advanced auctions of stolen property, which is how I believe.
Okay.
I think the narrative around Trump is amusing. And I don't think he's necessarily worse than the person he beat, but that might be damning him by high praise. What I do like about Trump, and this is going to sound very cynical,
Okay, let's
what
hear
I
it.
do like about Trump is that his own party doesn't like him, the Democrats hate him, and the bureaucrats despise him. And I know that sounds odd, but we could have a situation in the United States where for 4 years the government accomplishes nothing. And that would probably be, if it ever happened, the best 4 years in American history.
Explain that for us. Why so?
The government only does harm. They serve no useful purpose. All they do is start wars and tax people. And if we had a situation, the other thing I really like about Trump is rather than try to get one thing done,
He tries to get everything
he's
done.
ADD.
Yeah.
The guy's picked 50 fights. If he actually picked one fight and fought it through, he might win, which would be a tragedy. But the fact that he picks 50 fights and he has no natural allies, I think is potentially very, very beneficial. If we actually had 4 years in the United States where Congress and the presidency couldn't do any damage, that would be a very, very good thing.
Well, very interesting thoughts here. Well, lastly, to close, at the conference, you're talking to investors here about how they should position themselves with the changing mining industry. So give us a quick overview of that for those of us who aren't here physically.
Yesterday I was talking about the construction of new portfolios, when new money transfers into Sprott that's interested in mining. And one of the things that we've done is shifted new money into much higher quality assets, the best of the best. Early in a bull market, you get surprisingly good moves from large cap, high quality stocks. So the Wheaton Precious Metals, the Franco-Nevadas, the Rio Tintos of the world we're buying for people. People say, I don't want to buy a $40 stock, where can it go? Well, the truth is it can go to 120 or 130, that's where it can go. And if you take away some of my downside, some of my risk, you can take away some of my upside too. If you want to come into the gamier parts of the sector, the best theme that I can think of in mid-risk is looking at the GDXJ and looking at some companies that are included and as a consequence have high market caps, and some companies that are excluded and have low market caps, and figure out which low cap companies are strategic fits for the high market cap companies, and play the takeover game for the next 18 months.
Right.
Finally, at the other end of the risk spectrum, I think we're coming into a discovery market. And we haven't been in a discovery market for 20 years. But as an example, the recent success of Integra, or Reservoir, or Mariana, and the incredible market success enjoyed by Novo, $1 billion market cap with no assays, tells me that investors' appetites for discovery are increasing after 20 years of investors being interested in leverage or optionality to metal prices, which is a very different play. And by the way, a very healthy turn of events.
Right. Well, I'm so glad we had you here. Thank you so much, Rick.
A pleasure, thank you.